Thanks for joining David, Kevin, and myself for the educational video for the month of March. Today we're going to talk about tax filing tips and the reminders for 2023. It gets a little overwhelming. There's so many tax slips that end up coming by at this time of year. Every different account has a different type of tax slip that comes out. David and Kevin are going to explain that all to you. But as always, if you have any questions, please don't hesitate to call. Thanks. Take care. Bye-bye.
For investors who hold funds inside a non-registered account, also known as a cash account, you will receive tax slips at the end of each year. You'll receive either a T3, a T5, or a T5008. A T3 or T5 slip reports interest income, capital gains, or dividends for investments inside a mutual fund, GIC, or ETF. And these investment incomes must be reported when you file your taxes.
A T5008 is another slip that you might receive from your non-registered account if you did any sale transactions during the course of the year. The T5008 will lay out for you what the adjusted cost base of the investment that you sold was and what the market value was that you sold it at. Therefore, it will calculate for you what your capital gain or capital loss as it relates to that sale of securities was during the year. You must include that capital gain or that capital loss on your income tax return. Now, one thing you might think is, well, if I have a loss, do I even have to bother going through the exercise of including it? And the answer is yes, absolutely you want to include those losses because they can be carried back 3 years to offset previous capital gains that you may have had, or they can be carried forward indefinitely to be used against future capital gains. So you're doing yourself a disservice if you don't properly log any capital losses you may have incurred on a T5008. For anyone who owns an RRSP and made contributions during the course of the year, you should expect to receive at least one RRSP contribution receipt. For any contributions done between March to December of 2023, you should expect to receive one slip totaling all the contributions made during that period of time. This is called the remainder of the year RRSP contribution receipt. For any contributions made during the first 60 days of 2024, you might receive a couple of slips depending on how frequently you made those contributions during the first 60 days. But you definitely want to round up those slips and include them and carry them back to your 2023 income tax filing so that you get a bigger refund. For anyone who withdrew money from an RRSP or has converted their RRSP to a registered retirement income fund, a RRIF, and you withdrew money from that RRSP or that RRIF, you should also expect to receive either a T4 RRSP or a T4 RRIF, which will tell you exactly how much you withdrew and how much therefore you need to include as income and how much was withheld at source in taxes.
For those of you who opened and contributed to an FHSA or First Home Savings account in 2023, you will also receive a T4 FHSA for that contribution. Now, unlike the RSP, there's no first 60 days contribution limit, so you would have had to have made that contribution in 2023, but you will get a slip that will allow you to deduct that contribution from your taxable income in 2023. If you withdrew money from an RESP, or Registered Education Savings Plan, you will receive a T4A for the amount that you withdrew that will highlight how much of that withdrawal is taxable in the hands of the beneficiary recipient of the account.
As far as when you should expect to receive your tax slips, we're now filming this on March 12th, 2024, so many investors should have received copies in the mail of pretty much all their tax slips at this point in time. By law, investment asset management companies have until the end of March to get out tax slips, but typically they're usually produced by this point in time and either sent to you in the mail, or if you've gone in and registered for e-delivery of any tax slips directly with one of the fund companies like Fidelity, McKinsey, or CI. If you've registered for their online portal, you may have previously set up your preference that you wanted your tax documents sent to you via email or just uploaded to their portal. So just be aware of that if that's something you've done previously. Otherwise, by default, all of your tax slips will be mailed to you. But again, if you have any problems with that or you think you might be missing something, just give Kevin, Harry, or myself a call.
It's very important to stay up to date with your tax filings. There is a 5% penalty on the amount that you owe if you owe money when you file your taxes. There's also a 1% penalty on every full month that you are late in filing your taxes when you owe money. In the event that you don't owe money or you're going to get a refund, it is still important to file. There's no point in letting the government hang on to that refund because you don't get any interest on the amount of time that they're holding it for you until you file your taxes. So to put that money to work, it's best to get your taxes done, get your refund, and then reinvest that into a TFSA or future RRSPs for the current tax filing year. For young families, it's extremely important to stay on top of this, as well as senior citizens, as there's a lot of government income-tested benefits that you may receive that require you to file taxes so they can tell whether you meet the requirements. The guaranteed income supplement for seniors, childcare benefit for young families, these are just examples of different programs the government has that are income tested and require you to file taxes so the government can test your income.
If you get frustrated at all in the process of finding all your tax slips, please don't hesitate to give David, Kevin, or myself a call. And just a quick reminder, the deadline is April 30th, 2024, and for self-employed people, it is June 15th, 2024. Take care.